Get ready for massive moves. VinFast Auto Limited is undertaking a monumental restructuring in Vietnam, planning to sell its manufacturing arm VFTP for about $530 million. This deal involves splitting the company into a new subsidiary, VFVN, to handle global R&D and sales, while VFTP becomes an independent contract manufacturer. We break down exactly how this $530 million asset sale is reshaping VinFast's balance sheet and future strategy in a deep dive.
Tired of dropping your phone or struggling to hold it with one hand? The PopSocket's Pop Grip gives you a secure grip, works as a phone stand, and even lets you swap the top for a fresh new look. Simple, useful, and perfect for everyday phone use. Click the link in the comments to grab yours on Amazon.
Next up, we are looking at the semiconductor giant ARM Holdings. Following a record quarter, ARM's debut of its first proprietary silicon AGI CPU has sent its stock soaring. But as investors watch this AI surge, we need to examine the critical supply bottlenecks and how ARM is balancing that massive AI demand against the pressure it faces in the mobile unit market. Find out what's truly going right for ARM Holdings in this essential update. Then we switch gears completely and dive into some truly unexpected viral moments. TikTok user at Madeline Freeman shared an incredibly embarrassing experience while getting blood work done, exposing herself in front of a medical practitioner. We explore the story behind this viral video, the anxiety surrounding blood tests, and what this incident reveals about patient experiences and medical procedures. And finally, we look at global finance as Dubai takes center stage. Dubai-based financial services firm Al Rams has officially launched an asset management arm in Abu Dhabi to provide research-driven investment solutions across the GCC and MENA markets. Led by Hazem Bengasem, we analyze how this move is positioning Al Rams to drive the next phase of growth in regional capital markets. Don't miss out. Hit subscribe now for all the latest breaking news. VinFast is undertaking a significant restructuring of its operations in Vietnam, involving the divestiture of its local manufacturing arm while retaining key intellectual property and sales functions. The company plans to sell its Vietnamese manufacturing entity, VFTP, to a purchaser group for approximately $530 million, equivalent to about VND 133,096 billion. This move is designed to transition VinFast towards a more asset-light model. The restructuring involves splitting the business. VFTP will retain the Vietnam manufacturing business and associated debt, operating as an independent contract manufacturer under a cost-plus agreement targeting a roughly 5% margin for VinFast-branded vehicles. A new subsidiary, VFVN, will encompass global R&D, intellectual property, after-sales services, and sales operations. VinFast intends to utilize the proceeds from the sale primarily to repay approximately $404.8 million of a P-note. The remaining capital will be allocated to core growth areas, including product research and development, technology, brand building, and global sales. The transaction is targeted for completion by the third quarter of 2026, pending necessary shareholder and creditor approvals. Financial advisors have deemed the negotiated sale price fair from a financial perspective. This strategic shift aims to reduce capital intensity and balance sheet exposure in Vietnam. However, it introduces increased reliance on a third-party manufacturer, whose new controlling shareholder has limited prior manufacturing experience. Governance-sensitive investors will be monitoring the implementation of the new manufacturing agreement post-closing and the influence of related party dynamics on future terms. The purchaser group leading the transaction includes Chuang Lai and a minority investment from VinFast CEO Pham Nhat Vuong. Vingroup, a controlling shareholder associated with Mr. Pham, also holds significant stakes in both VFTP and VFVN. The board has disclosed extensive risk factors, including that shareholders will not directly receive the sale proceeds. Directors have abstained from the vote due to differing interests, but controlling shareholders intend to support the approval at an extraordinary general meeting scheduled for May 27, 2026. ARM Holdings is navigating a pivotal moment, balancing explosive demand for its new proprietary silicon AGI CPU against global supply constraints and headwinds in its mobile segment. The company's stock has been reacting strongly to its debut of AI-focused processors for data centers, with recent performance reflecting investor focus on its strategic pivot toward artificial intelligence. Trading around $212.65, ARM has recently reported a record revenue and earnings quarter following the launch of these key AI products. This momentum is evident in the stock's performance, which has surged 4.6% over the past week, 42.8% over the last month, and 85.3% year-to-date, underscoring investor enthusiasm for its AI-centric product trajectory. For investors, the central challenge lies in ARM's ability to effectively manage this massive surge in AI-related demand, while simultaneously contending with real-world supply bottlenecks and pressures on its legacy mobile unit due to memory shortages and rising costs. The market is closely assessing the future mix between high-growth AI data center exposure and established smartphone revenues, which could significantly alter the long-term valuation narrative for Nasdaq GS, ARM, especially if supply limitations or mobile challenges persist. ARM Holdings, a key architect and licensor of central processing unit products and related technologies for semiconductor companies and OEMs, is positioned with exceptional growth potential supported by a flawless balance sheet. While the immediate focus is on balancing AI demand with supply realities, the company's fundamental strength and strategic positioning in the evolving semiconductor landscape remain key considerations for analysts and investors. A TikTok user in Los Angeles has shared an embarrassing and startling experience while getting blood work done, sparking widespread reactions online. The user, at Madeline Freeman, posted a video detailing how, while deciding which arm to have a blood draw performed, she unzipped her sweatshirt only to discover her chest was exposed to the medical practitioner. The user described the moment with the caption, "Dead lol," and issued a public warning. Do not ever go and get your blood work done in a tube top. Madeline recounted that she had to go to the back of the clinic to provide her work order before the practitioner asked which arm to use for the test. She hesitated because she had plans requiring her hands the following day, wanting to avoid potential pain. Wearing a sweatshirt with a tube top underneath, pulling the zipper down resulted in the exposure. Although the practitioner reportedly laughed it off and dismissed it as common, Madeline expressed doubt regarding the practitioner's candor, suggesting they may have shared the incident with others. The video quickly gained traction on the platform, drawing comments such as "dead lol" and "nothing prepared me for where this story was going." Other users commented on the experience, with one noting that they often experience pain or bruising from blood draws, and another highlighting the accidental nature of the exposure. This incident highlights broader anxieties surrounding medical procedures. An article published by Global Data on October 18, 2024, revealed that a survey of over 600 U.S. citizens regarding blood tests indicated significant anxiety. 78% of respondents reported some level of anxiety when getting blood drawn, with nearly 58% describing this anxiety as moderate or severe. Furthermore, 37% expressed a fear of needles. The survey also indicated that the primary reason for canceling blood tests is inconvenience, with 69% unwilling to travel more than 10 miles for the procedure. Dubai-based financial services firm Al Rams has officially launched an asset management arm in Abu Dhabi, marking a significant expansion into the regional investment landscape. This new entity, named ARAM Capital, operates as a wholly owned subsidiary under the Abu Dhabi Global Market, ADGM, and is positioned to deliver research-driven investment solutions across the GCC and broader MENA capital markets. ARAM Capital targets local, regional, and international investors seeking strategies focused on long-term capital growth and preservation, utilizing institutional-grade investment methodologies. The firm offers a comprehensive suite of services, including asset management across public equities, fixed income, and real estate, supplemented by investment advisory services and select fintech-enabled capabilities. The firm's strategy is underpinned by a combination of deep regional insight and global investment best practices, overseen by Chairman Hazem Bengasem and Vice Chairman Khalid Nasser, Humaid Abdul Rahman al-Shamsi. The investment approach integrates rigorous bottom-up fundamental research with top-down macroeconomic analysis to pinpoint undervalued opportunities, emphasizing stringent risk management and disciplined portfolio construction. Dafer al-Ababi, chairman of the board at Al Rams, highlighted the strategic importance of the move. He stated that by merging deep regional expertise with global standards within a regulated environment, Al Rams is well placed to support the next phase of growth in the UAE's asset management sector. Al-Ababi added that this initiative will enhance capabilities and contribute to the evolution of regional capital markets, ultimately unlocking new investor opportunities and strengthening market resilience. Bengasem emphasized the growing market need for sophisticated platforms. He noted that as regional capital markets mature, there is increasing demand for investment platforms characterized by discipline, research-led practices, and robust governance. He concluded that ARAM Capital is strategically positioned to foster deeper market sophistication, broaden investment access, and ensure the delivery of sustainable, long-term value.